Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the Financial Conduct Authority and their plan to make lending much easier for certain people. We're talking retirees, we're talking first-time buyers, and those people that are self-employed. This is really, I think, good news because there are certain people that get massively penalised even though they can keep up with their rental payments, but because maybe they have irregular income, it makes it difficult for them to get a mortgage. So in this video, I'm going to break down what they're suggesting, what they're looking at, and how this could impact house prices and the property market. Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 44,000 subscribers. And by subscribing, you'll get all the latest property news, house price data, interest rate data, and much, much more. And let's get some views on this video by smashing like, tickling like, doing something to the like button. That really helps with the YouTube algorithm, and that's really helped the channel grow. So thank you to everybody that does that. So this is interesting because mostly governments like to make things more difficult. That's normally what happens. But what happened in 2008 was that banks were reckless. I recall I was an investor back then. I've been an investor since 1999. And back then, getting money was really easy. You went to your mortgage broker and they asked if you're on a self-cert mortgage, how much you earned, and guided you to maybe what you needed to earn in order to get approved for the mortgage. And that was fairly common back then. You could also borrow 110% of the value of a property. And how that worked is you bought a 100 grand property, they'd give you 100 grand in a mortgage and £10,000 as a loan. And people were meant to use those loans to put a new kitchen, new bathroom, renovate the property and bring it up to a good standard. But they didn't. They went and bought a new car and went on holiday. And that's why we got a major crisis in 2008. This happened in America and in the UK, and ultimately the banks collapsed and people stopped paying their loans back. Now, what that meant was that the Financial Conduct Authority stepped in and they made things really hard. Like, to get a mortgage now is tough. You go through so many hurdles in order to get the mortgage. And because of that, mortgages have done very well. Since 2014, 99% of mortgages that originated between 2014 and today got paid back by the lender or are on track. So only 1% of them had a major problem. And that's what the Financial Conduct Authority wants to see. But now they're looking at this with a push from the Labour government being said, maybe you're a little too strict and now we need to loosen this up. So this is the opposite of 2008. In 2008, we went really strict, and now we're looking at making things easier to get money. So there's a few people that they want to help with this. One is first-time buyers. They want to get more people onto the property ladder. Retired people, they've got some ideas for them. And the self-employed. So all of these are good, and that's what we want to do. So let's have a look at what they're proposing here. So for first-time buyers, some lenders have already started looking at this, but the Financial Conduct Authority is saying, hey, other lenders, you should start looking at this as well. And they're saying a consideration in your application should be, did you pay your rent on time for a number of years? And if you've paid your rent on time, then if you've got maybe a bad credit rating, but you've paid your rent on time, which indicates you're likely to pay your mortgage on time, maybe you could still get approved for that mortgage. And that's something that they want considered by lenders, and they're going to put some guidance together, and this hopefully will be something that will come out as a white paper by the end of September, so not too long. So that's good for first-time buyers. Retirees, this one's interesting. So they're saying that you get a lot of retirees that the income disappears, but they've got a lot of equity in their property. Now, right now, you can do some crazy equity release schemes, and then I think some of them people end up getting your property upon your death. They give you a load of money before, but that isn't ideal. People then spend the money still, and then they run out, and then their children get no inheritance. What they're looking at here is an equity release, but monthly, which could be a top up to a pension. So what we're saying here is that, hey, look, you've got a 500 grand property here. Maybe you release 100 grand of that, but we give it to you over 5 years on a monthly basis. That is an option that they're looking at here. Now, it's not clear if you would pay that back or it would be sorted upon your death, and it might come out of your will. That is something that they need to make a bit clearer, but it sounds like that's what they would be looking at doing here. So they give you an equity release, and then the bank would own that part of the property, again, that they've released the equity on. So that's something that they're considering, but the difference is that it would be a monthly equity release rather than a great big lump sum that people can't handle, and they overspend as well. With the self-employed, what they're saying here is that it's going to be easier to get a mortgage. They're going to make sure that lenders have easier criteria that you've got to tick those boxes in order to become a lender. And they've got to consider unpredictable income. So it's going to be similar to the first time buyers. If you can prove over 2, 3, 4 years that you've paid your rent every single month, but you've been self-employed and you've had lumps of money that come in and then it goes quiet and then you get lumps of money that come in again, that gives you options to still get mortgages, and that is good. So what they're also going to do is make the stress tests easier. So stress tests have been made easier in the last month, actually. And so it was looking the stress test that you had to basically be able to afford. I think it was about 2.5% to 3% on top of what the mortgage rate is that you're going to get, meaning that if you got a 4% mortgage, you had to be able to afford it at 7%. They've reduced that down to just 0.5% above the rate that you get. So 4% would be 4.5%, meaning more people are going to be able to afford past the stress test. But they're saying, let's roll this out to retirees, self-employed, and first-time buyers as well, because those guys often get the hardest, like what the smallest amount of products on the market here. So basically, it looks like the government wants to make it more accessible and easier to get money. Now, what could this do to house prices? Well, look, house prices have dropped in March and April. That's due to the stamp duty increase. But does that continue? We don't know for sure. What we do know is the market is slow at the moment. There is a lot of listings at the moment. There is more buyers in the market, but not enough to cover those listings. And the market has stagnated at the moment. By making it easier for people to get mortgages and more people sorted, that could keep the market going. It could keep the momentum going a little bit longer. And that could be positive. If you want house prices to rise, that could be a positive outcome. If you want them to drop, this means that they might still drop, but maybe not quite as bad as people were expecting. What do you think about this stuff? I think this is useful, and I think it is over the top, the stuff. I don't want to go back to 2007 where anyone could get a mortgage at any amount, but I do think we're a little bit too strict. And it shows in the data that 99% of mortgages since 2014 have been paid back. So look, let's make it a little easier and help more people get the property they want. Let me know what you think in the comments. Anyway, do smash the like button, do subscribe, do check out all the other content as well on the channel, including this video right here.